Colleagues, it's 9 p.m. Machilo. Colleagues, it's 9 Pinkas Machilo Sebata. I'm doing a video. On this video, my key focus is to explain how I manage my trades. For me, trade management starts on how you decide which trades to pick, how you place the trades, and when do you get out. So let me take you through. I'll use this example from yesterday, because yesterday during the day I already picked this one, that it was a candidate. I even said here in my Twitter account that it's on my watch list from yesterday. And if you can just peep in here and see that when I did say that, it was trading at around 2.33. Why did I choose this one? It had already blown up and was trading outside these Bollinger Bands, 3 standard deviations. It had popped out of them. It was higher than the 3 standard deviation Bollinger Bands, and that's usually a trigger for me. But it's not the only trigger. The other trigger which I look for is that the stock should have high volatility, so that there is a potential for the stock to move more than 20% within a week. So I came to FinViz, looked at this stock, and this is the screenshot which I took from FinViz yesterday. Here's the volatility. Just to make it clearer, it was 18% volatility. That's great volatility. If it's above 10, I'm happy. And it had already moved 39.39% in one day. Most people, when they see a stock which has moved this much, they don't want to get involved. That's where I play. 3 standard deviations off, big move in a day. I like that. And way far from its SMA 200, high potential for revision to the mean. And this company is basically messed up. Losing capital, not making any money, losing money. In fact, yes, I needed to have options. And look at this. We can't even establish a PE yet. Everything is negative here. But it has been moving greatly. Those are the type of companies which I want. That said, let's go to the... let me just go back to my tweet and see what else I did. And I said I expected 5 potential backers. How I get to the 5 backers, I've dealt with it before in other videos. But in essence, when a stock moves about 20%, with my option structuring, I do get a 5%, a 5 backer. That is 5 times what I put in. If I had put in 200, I'm likely to get about 1,000. Just to quickly share that, I wasn't planning to share it here today. Let me see if I can quickly rush to my pictures and see if I can get it quickly for you. Right, here's the setup which I use. If it moves about 20% or even less than 20%, it will already be somewhere there. If it gets to about 20%, 25% in this case here, it will be 5 times what I'm risking, which is 200. So it would have cost me 200 to set up this trade. And once it moves about 25, it's 25 here, but with the structuring and trade management, 20% move will give me my 5 backer. So how is the 5 backer? Risking 200, getting a profit of 1,000, that's a 5 backer. I'll leave it at that. I've dealt with this before. And also, these 3 standard deviations. Let me see if I have it close by. If I don't have it close, I will pass. That's not the essence of my video today. Today, I'm just showing you trade management. Let me see if I can have a standard deviation chart here. wanted to show you the bell curve and how, there we go. Let's just take that one, hope it comes out clear. It's way too small. Big enough. This is where the normal price activity happens mostly. Bollinger Bands usually come standard with 2 standard deviations. When it pops out of standard 2 deviations, there is about a 2.2 chance that it pops out this side. But I go for 3 standard deviations where it's only about 0.1% of the times when it really pops out there. Those are the trades which I want. This is what is referred to in this chart. These are the 3 standard deviation bands. So this one, it popped out. This only happens in 0.1% of the times. There is some skew. At worst, it can be about 1% of the times. So these are the type of trades which I pick. And how do I pick it? In most cases, during open trade, I analyze stocks which have moved a lot, and I like to see stocks which are worth about 2 billion. If it's worth about 2 billion and it has moved greatly in a day and it has high volatility, then I like to get involved. There we are, it's 2.6 billion. It had moved 39%. Volatility was about 18%. Those are the shares. Those are things which led me to this. Then, when did I place the trade? It's a tricky question, but I'll go and illustrate something. When I posted this on Twitter, it was trading at 2.33. Here's the chart. This is where 2.33 was. And placing this at around that level would have meant that when it opened and gapped all the way up to there, one would have made about 67%. Here comes the trade management. Once a stock has moved about 20%, I usually like to close that trade and reconstruct it. Why am I closing it? I would have achieved my 5-bagger status, which I'm targeting, and also to hedge what I've gained. Remember, if I just put 200 and now I'm sitting with 1,000, it's 5 times what I had before. Now I'm having 1,000, and I'll keep it simple. I'll just assume that the 1,000 is including the amount actually which I had put, which I would have recovered. Technically, to be closer to the truth, it will be now worth about 1.2, but let's call it 1,000. So I want to protect that 1,000. How do I protect it? I close the whole trade. So if I close the whole trade, I'm now have gained that 1,000. This is would be what would have happened. Okay, let's change the language. This is what happened when the market opened today. Once it gapped there, I closed that trade. It was way more than a 5-bagger. Once I closed it, I reconstructed it to put a new strike at this level here. At the open, now I'm putting a new strike that if it goes up, I benefit. If it goes down, I benefit. Then what happened? Here's this small white line. It's not showing clearly there, but let me just pull this thing down. You can see there it moved 26% down. So within 24 hours, it moved up and down 26. So the 26 move again is another 5-bagger. So it's a 5-bagger. First of all, I made a 5-bagger. Let's call it from 200 to 1,000. It's a 5-bagger. Then that 1,000, I constructed a new setup and it moved 26% down. Now I've made another 5-bagger on the 1,000. So the capital account there will be 5,000 in one day. You start with 200 and you end up with 5,000. Those are 5-baggers. The reason was not only to gain this part, but it was to hedge what I had gained by closing that trade and opening a new one, meaning that whatever it made, I'm keeping now. If it goes up, I make more. If it goes down, I make some. But suppose I had not done the hedge, I had kept this trade which I had set up yesterday, what was going to happen, I would have lost this 20, I would have lost it now. It would only be having a move 2.94 from this level. So that move will be small. There's no compounding there. So my hedging, whenever it hits up more than 20%, it's a hedging structure, and also it's a compounding one, that whatever movement it does from there on, I'm compounding on that. That's why I'm saying one would have started with 200 and end the day with 5,000. That's serious returns, guys. Or to simplify things, if I had only placed this trade just before the market closed, at open it gapped up about 39%. I know that gapped about 39%, but if say for allowance, somebody closed it at 35 and reconstructed it and it went down that much there. And do you notice I'm just showing you if it had gone down up to 26%. After this 26%, one could have easily closed it, because that's my trade rules. After this 26%, I should close this trade and reconstruct a new one. Now a new one would have been moving from there to there. So that move alone today is almost 19% and something. So if you started with 200, you reconstruct the trade when it gaps up at the open. You close in that 5 bagger, you get another one during the course of the day, you close it and reconstruct another one. Towards the end of trade today, you're already close enough to another 5 bagger. So it will be 5 bagger, 5 bagger, 5 bagger, 3 5 baggers compounding on each other. These are the trades which I really enjoy. And you would notice that once it had gone that 26% and you close the trade, you construct a new one, you're still compounding. That's how you manage the trades. Open it with a struggle. Once it moves more than 20%, close that position, reopen a new one there. Another 20% move, close it and reopen it. Doesn't matter, you can do this twice, 3 times a day. If it's still moving more than 20%, you're sitting pretty. But if you notice, if I had not done trade management by opening and restructuring this trade, from where I started analyzing it yesterday, when I posted it on Twitter, the difference now will be insignificant. It would have rocketed up and came back, and I'll be making less than 10%. But with trade management, the compounding is already around 125 times. That's trade management for me. And if it doesn't move, let's suppose like this wing which is here, it's already moved 20%. Let's just suppose it moves 20% and I reconstruct it, and now it wanders around without moving. I'll just technically close this trade with about 1% gain or 1% loss. It won't make any difference after compounding it to 125%. That's how I manage these trades. And just for clarity, because this is in hindsight, I'm going to pick a trade, a current trade going on, because the market is still open now. Let's just quickly pick one. I've already analyzed this a lot, and yeah, I won't say whether I've traded it already or not. But this one, I want to take you from step 1. How do I identify it? I go to FinViz, get into FinViz. These are the options, the structuring the screen which I want. I want it to be optionable. I tried the 2, I always like to filter by over 2 billion. I had some challenges there, so I left it blank. Sometimes you don't get any stocks within that range, so you have to go down a bit. That's what happened here. So first option, it's optionable and shortable. If it doesn't have options, I won't be able to play my option structuring. So that's a filter which I want. Then the second filter is on technicals. I want volatility to be greater than 10%. That's a condition. If the volatility is too low, there won't be any big moves. I want performance for the today. I just say it up. Usually I want the performance to be really significant in the more than 20% region. But let's just go with today up. I'll do the filter at the bottom. So those are the three conditions which I want. First, it needs to be optionable. Then volatility more than 10%. It has to be trading up. I prefer to structure my trades, this type of trades, with stocks which have shot to the top. I don't necessarily like to pick them at the bottom, but when the market conditions are that most of the things are at the bottom, I can do the structuring at the bottom too. So this is what I got. Then I filtered it with the highest changes per day. When I've done that, then I went and looked at these stocks. Let me just hide the filter now to create space. Then I'm looking for, remember I did not filter by market cap. So I want to see stocks which are close enough to 2 billion. This one didn't qualify, it's just 42 million. 107 is not even a billion. This was the first one, 1.8 billion. So it's close enough. That's why I picked on it. Then you keep going down. There's not much really. So I picked on this one. After picking on it, I click on it. I come and see, okay, it's gapped way up there. Fine. Then I look at this analysis. I see that it's way above its 200 SMA. 563% above that. It has really moved away from the 200. It has moved a lot. For the day, it has moved to 32%. Great. Volatility 22%. Great. This is what the type of stock which I want, and it has options. So once I'm happy with this, this is now my candidate. I go into my setup, which will show me the 3 standard deviation. Is it inside these 3 standard deviations? Yes, it popped even way higher than that. So it's outside the 3 standard deviations. So its move is way outside 3 standard deviations. Then I looked at this. If you're quick, you might pick why I drew this dotted line here. That's when I was analyzing it. It was at 18. So the type of move which I want is above. I just said 18 plus 18 times 1.2, meaning a move of 20%. It would need to come to that level, which it had already touched during the course of the day. And on the downside, it would need to drop to that level for a 20% move. So this is the 5 bigger targets areas. So it has moved a little bit upwards a bit, but yeah, give or take. So once I see this one and it fits the 3 standard deviation need, then I construct those bars to see where I need it to move, so that once it starts moving there, I get a notification and I come and trade manage. So if it moves up to that level, I'll close the original position and reconstruct a similar position, but at this level now. If it moves down to there, I'll do the same. But if I can see that technicals maybe after 3 days, 6 days is struggling around 15% or whatever, I close the trade. These 5 beggars is not a fixation, but I trade what I'm seeing, and if the movement is no longer flying, close the trade, because a move of about 15%, it's in the region of 2.5 to 3 beggar. So yeah, that will still be highly significant, but this is how I've constructed it. So I'm waiting to see what happens to it when it closes today and the movement tomorrow. But that's how I manage. And also, I'll keep managing these positions of mine like that, yes. And also, I put this one as a point of interest. On this day, I did not trade this, but on this day, it had closed above this 3 standard deviation. If one had placed the trade when it closed there, and after 1, 2, on the 3rd day, today, it would have gapped about 32%. That's where you close the trade and you reconstruct it. But I missed this move. I did not have enough powder. I was focused elsewhere. But yeah, that's where it is, and that's how it's structured. So tomorrow when it gaps, the reason why I want to make these trades a day before is because this type of companies with such volatility usually are prone to gapping in the following day. They usually gap upwards or downwards. So I like to be already in the position before they close, so that when there's a gap the following day, I'm benefiting. And that's where I usually get my 5 baggers in the first trade, like I showed with the previous chart. So yeah, that's how I manage my trades, how I construct the actual trade. It will be dealt with in another video, but yeah. And I won't be going over and over these trades. I just wanted to make sure that I present the trade management part, because if you don't do that one, you will miss on protecting what you have made, and also you will miss on compounding. Like the example which I have for the trade from yesterday, if I had not done my trade management, I'll be sitting on nothing currently. It is almost back to the level where I'd gotten in. But I've already had a 5 bagger, more than 5 bagger, a 5 bagger there, and close enough to a 5 bagger already now here. It's just at 19%. This is the type of trade I will definitely close before the close. Whether if it's sitting between 17 and 20%, even if it's not really a 5 bagger, I'll close that trade, because it will be giving me something like 4 times. I'll close that and decide whether I want to put another one on or the trade is gone. For me, it kept up, it moved back there. Yes, if this gets me by the end of business today, I'll just close this trade and I'm unlikely to reconstruct it. I don't see much of a benefit from it from here on. But yeah, monies have been made. If I've made 5 times, you get to 25, another 5 times, 125 times what you started off with. It's a great trade, and at times it's time to leave it, because this is now in the small movements. When you're trading, you decide. My trading style is on the serious fast lane. The average investment firms will be happy with a return of 20% annually, and that's the return which I want on weekly basis, but I usually score it in a day. So that's trade management for you guys, and I've just shown you how to choose the potential next trade for tomorrow and place the trade at those levels and see what happens tomorrow. But I won't come back to analyze how this trade performed. I've shown you enough trades. If you go into my Twitter account, you will see enough of these trades and my investment philosophy on it. Yeah, I've done lots of this and I've commented lots about it. It's time to go back to the background. I'll just scroll there. This was a screen from, just left it as a screen without any comment. People who looked at these stocks could have seen potential of 5 baggers. Let me just do this. I'll show you one, the top one there. This was done in the morning today, before the market opened. And if I go and show you what has happened to that top one, let me just get the symbol right. TLRY. It's been a lovely stock. TLRY. I'll just show you what has happened today. At the open, it gapped downwards. Let's suppose you did not even get it the previous day, you got it at the open today. If you had got it at the open today and placed the trade, it's already 40%. Yesterday, when I dropped this in the morning before the markets opened, I did not comment. I just dropped this screen and left it as it is. No comment was done. But if you had picked that top one, you would have been sitting with more than 40%, depending. If you picked it at the open, you would have gained 40%. This was a detailed analysis of a trade which I did, Global Star. I'd shown it how I developed it, how to look at the expected move for the day before the open. And yeah, it's another one which did let me just say it was a great trade also. If one picked it there, it gapped up 5 bagger, gapped down 5 bagger. Let me leave it at that. That was that one. When I first noticed it, that was the big bar which I've shown there. These are the conditions which I wanted. A move for the day of 69, volatility 22, way above SMA 200, optionable. Those are the conditions which I keep looking for. They were there on Global Star. That's why I traded it. So I did this one and another 5 bagger. So I've been explaining these things a little bit more on my Twitter account. If you go down there and check, you'll find it. Why? I'm just summarizing this one because now I'm closing on this topic. I won't be talking about it. These three haven't reached there. One of them has already done the 5 bagger, but I picked them last weekend for this week. Yeah, let me leave it at that. That's it, guys. That's trade management, and showing you also how I would pick a stock to trade. The one which I'm leaving you with as a potential trade is MVIS Microvision. Let's see how it shows up tomorrow. I thank you, guys. I'm concluding this one. It's been all about trade management. Do have yourselves lovely trading year. I thank you. Stusanang, Pinkas Machilu. Let's have good trading, guys.